I want to go over the portfolio performance for June, halfway through the year, updated the portfolio calculator. Let's take a look at these one by one. There's 8 strategies, and we also will be changing the calculator to use AT 2020. So any of these portfolios that use AT 2020 will now use AT 2021. Take me a little bit of time to update that. And so huge gains the last 4 months in all 78 after having a rough Q4. Actually, October did well, but then November and December were tough. And then slow start January, February, and then big gains in March through June. So good year, pacing a good year based on historical. About 400K would be the pace that it's going right now. If it performs the way it did the first half in the second half. So good trading on the all 78. Ended the month, the equity peaks at all strategy X's short list 51. And let's let the portfolio calculator update. It is $357 away from an equity peak, up 28K on the month, having its biggest month of the year as we drop in volatility. The SR counter trends are doing well. All strategy X's 51 plus 7 new. At equity peaks up 28K and profitable on the year, similar to previous years. And stock index portfolio 27. End of the month at equity peaks up 10, almost 11K on the month, having 5 winning months in a row, doing well on the year, pacing a 2019 type of year, which was a low volatility type of year. And then the 200K portfolio, we talk about this one quite frequently. It had about 7 days in a row where it made equity peaks, but it ended the month $305 away from equity peaks, up about 25.5K on the month. That's a 200K portfolio. Let's look at the 50K portfolio. It ended the month as well at equity peaks, up 5K on the month, up 22K on the year, and having a nice year as well. Good trading for a 50K portfolio. Micro stock index and micro gold. This is our more aggressive portfolio, up 1,500 on the month, up 9.4K on the year. And this is 1/10 of the results of the E-minis and regular gold contract. The gold contract does not have a continuous contract. The micro gold does not. And the micro ES and micro NQ use 1/10 of the ES and NQ data prior to 2 years ago. So we're still using 1/10 of that data because it's pretty difficult to compile the results just based on the micros. And so sometimes there's differences, and the slippage commission factor can be different as well, some of the trade differences as well. So that is the aggressive. The conservative version is up on the month and at equity peak. So most of these are at equity peaks. I believe 6 out of 8 ended equity peaks on the month. Month ending June 30, 2021, up 1116.75, up 5,700 on the year. And depending on how you traded in and out or your position sizing, let's go through the drawdown curve on some of these. It's had regular drawdowns as well. What is a good drawdown to get in? It depends on how long you want to wait. The steeper the drawdown, the longer you might have to wait. And so a frequent drawdown is $500 fairly frequently, $500, $1,000, a little less frequently, $1,500, even less frequently. And so this basically, the conservative version, is the 200K portfolio strategies for the ES, NQ, and gold, the micro versions of those strategies in the 200K portfolio. And as you know, the 200K portfolio trades many other markets. So another question, if you wait for a drawdown on the aggressive version, let's look at the drawdown curve there. When to get in on a drawdown. Now you can take a breakout. You can trade breakouts knowing one of the reasons we recommend starting on a drawdown is if you make automation errors or if it makes a new worst case drawdown, you want to buffer that. But if you have additional capital and you want to trade on a breakout, you can do that. Has very frequent $1,500 drawdowns in this type of volatility. And so $1,000 to $1,500 drawdown is something that happens quite frequently in this portfolio. In the 50K portfolio, maybe a 3 to 5K drawdown would be something to wait for. Once again, sometimes these portfolios go into breakout mode, don't pull back much, and so you can see here 4K has been a number here in the last couple of months that it would come back to, but it might be another couple of months before a 5K drawdown, or 3 months. I don't know. 200K portfolio, we have we recommend a 5 to 8K drawdown in general. And so if you scroll down to the drawdown curve and look at when to start on a drawdown, you can see how it's been at equity peaks. It comes up in here and hugs this equity peak line and doesn't pull back much. This is the 5K area. You can see 5K happens pretty frequently. Hasn't happened lately, but it doesn't take much to get a 5K drawdown. It's nice when things go at equity peaks a lot, but 5 to 8K drawdowns can happen pretty quickly all of a sudden. So you have to be prepared for that when trading, and it's easy to get frustrated and just jump in. And if you have the extra capital, you can do that. But patience pays off, and so that's some of the things that we're looking at in some of these portfolios: the equity peaks, the results for June, and when to start on a drawdown.